Hey, what is going on, Bulls and Bears? It is Thursday, April 27th, 2023. I've never seen such a disconnect between what's happening in the real economy. I'm talking about the people's economy, consumers, versus the stock market. Today, Dow Jones up over 1.5%. And, these gains are just so severely detached from what the average person, what the average working person, middle class person is feeling. Nasdaq today up 2.4%, Russell 2000 1.2%, S&P 500 up nearly 1.6%. And when you see what's happening with the banks right now, when you see what's happening with the debt, the late payments that are increasing every month, we look at them, late payments become worse. When you look at Main Street versus Wall Street, I've never seen things this disconnected. So supposedly the good news today was the earnings So Meta platforms, Facebook, Meta slash Facebook. But what gets me is a lot of companies that are showing stronger than expected earnings. Here's a headline right here: Meta platforms slash Facebook, Meta slash Facebook. Meta stores after earnings crush expectations. A lot of these same companies that are getting great earnings are laying people off. So just a further disconnect between Main Street and what these companies are making. Uh, Profits may be good, but if they're not paying their workers enough to keep up with the cost of living, and on top of that, they're laying people off, that's just going to worsen the disconnect between Wall Street and Main. Now, some of these stocks are so beaten down, especially these tech stocks, that any bit of good news is going to cause a bounce in the market. But is it a dead cat bounce? A lot of people would say yes. And think about who's buying these stocks right now. A lot of bottom fishers, but it's big money, right? You don't see surges like this in the stock market where it's Joe Sixpack and your next door neighbor in buying stocks on their E Trade account, on their Robinhood account. This is big money. These are financial whales getting in and moving the markets. Maybe it's a short squeeze, but do you think the way the economy is functioning right now, or malfunctioning, with the banks situation right now with the banks, another big bank is on the verge of failing, by the way. But with everything happening right now, with the amounts of debt, do you think that we've hit bottom and now we're going to see a new bull market up to new all-time highs? I really don't think so. I really don't think so. Please let me know what you think down in comments. But I think this is a dead cat bounce. I mean, that's the most common phrase that I could think to call it. But let's take a look at some other news here. Another major bank failure. We talked about this in our last report. First Republic Bank. The numbers out of this bank are pretty staggering. $100 billion, billion with a B, lost just in the last quarter. And that doesn't even count what we've seen so far here in April, which is the first month of the second quarter of the year. The stock for this bank, $147, closed below $6 here just recently. So from 147 down to $6. And I told you back in March, and even before March, I told you that these banks are insolvent. We're going to see more bank failures, I think, this year than we've seen in any other year prior. And just because the banks get rescued doesn't mean that they didn't get that they didn't fail. These are bank failures. We already had $30 billion injected into this banks from some other big banks, from the mega banks. They had to come in and rescue the bank. Now, this bank, First Republic Bank, is actually much bigger than Silicon Valley Bank. This is another bank based in San Francisco, much bigger than Silicon Valley Bank. So a lot of the things that affect the Silicon Valley are affecting this bank. There's a lot of big tech heavy depositors at this bank, but it's much bigger. So what's going to happen if this bank fails? It's really a no-win situation. If you look at the Fed, if they bail the bank out and rescue everybody, then they're going to be expected to rescue every other bank after them. And that's going to be highly, highly inflationary. And they're supposed to be fighting inflation, right? But if they let the bank fail, that's going to cause a lot more fear and panic. And that's going to be deflationary, especially when other banks see this. They're going to be very restrictive. We're already starting to see very tight lending, a tightening, or what's called a credit crunch. If banks see that they let this bank fail, then that's going to make the credit crunch um, even worse. Banks are going to be even more fearful, and it's going to be really hard to get a loan, and that's going to be deflationary, right? So we could go any direction at this point. It depends on how this is handled. So it's a very interesting time to try to look at this and strategize as to how to invest in this type of market. Now, the reason First Republic Bank is failing is because customers are already scared and have already pulled out $100 billion just in the first quarter. What's going to happen now if this bank fails? That's going to cause the fear of these other banks to be even worse. See what I'm saying here? So this is a snowball that's likely going to get bigger as another bank fails. The fear gets bigger. More people pull their money out, making all these other banks um, insolvent. I mean, they're already insolvent, but now come on, all the banks are insolvent when it comes to how many loans they've given out versus how much they have in deposits. That's the big secret that none of us are supposed to know, that all the banks are insolvent. Well, the insolvency doesn't get realized or recognized until too many people take out the funds out of the bank. But here it is. I mean, everybody should be able to see it. But anyone that thinks that the first two banks that failed back in March and the failures we're seeing now, if anyone thinks this is the end, what makes you think that, right? Is there going to be, a superhero that comes in? Is the Fed going to just print endless amounts of money? And again, if that happens, what's the inflationary scenario going to look like here in the United States, right? So you better have a way to protect yourself. You better have some hard assets, something that'll at least inflate with the massive inflation that we're going to see if that happens. Now, they could say these banks are going to fail, and they could let hundreds of banks fail, and it could be devastating, and it could be deflationary. That's why you always have to also have cash on the side, right? So we're going to benefit from this no matter which way things play out. Of course, we'll follow it, we'll track it, we'll try to figure out which way it's going to go. But we don't know, because they could change the rules at the last minute. They could say, okay, now we're going to go ahead and rescue somebody. And then after that, now we decide not to rescue them, right? So no one can read the minds of the ones that are going to come to the rescue of some of these banks. It's impossible. I mean, how do you know exactly how to invest? You don't. So you have to be cautious and try to play both scenarios. That's just what I'm doing. And that's what I think would be the smartest thing to do. I mean, if you have a better strategy, please let me know down in comment. Let's move on here. Bank of America, recent article here. Bank stress likely to lead to tighter lending and more corporate defaults. That's Bank of America's latest credit survey. Now, is Bank of America going to come out and tell you the cold hard truth, or are they going to beat around the bush? Well, obviously they're beating around the bush. No bank's going to come out and say all banks are insolvent. We've loaned out too much money. None of the banks have enough deposits to cover all the liabilities or all the loans that were given out. You're never going to hear that, right? So that's why you have to kind of read between the lines, or read between the lies, as many would call it. And I'll refer again to the interview I did a couple weeks ago here on this channel with Bob Kudla. He says we're in and going into an inflationary depression. He feels like the central banks are going to print. And ultimately, I think there's going to be a pivot. They're going to cut rates, and you're going to see markets take off. You're going to see inflation just run rampant. It's going to be mind blowing, but I think that's what's going to happen. So I'm still erring on the side of inflation and higher cost of living, higher asset prices here. Yes, there may be some falling prices in a few areas, but they could really reverse this in a hurry, and it's going to make your head spin how fast they might come in and pivot on this, right? So what do you think about the bank failures? What do you think about the Bank of America warning? All the optimism in the stock market, considering the huge separation between Wall Street and Main Street. Please let me know down in the comments, everybody. We'll talk to you very soon. We're going to wrap this one up. Keep stacking. Bye for now.